There are 52 Thursdays in a year. 52 of them can be a payday for you. If you're building income outside a 9 to 5, looking for retirement income, or simply are looking to augment your current wealth, there's 5 ETFs right now that give you a distribution in your account every single Thursday. But pays every Thursday and worth owning are two different questions, because some of these have been doing this for over a year, one of them has been trading for a few months, and at the end of the video, you're going to know which is which, and you're going to know which ETF belongs in your weekly income portfolio. Now, before we get started, I do want to put out a disclaimer that this video is for education purposes only, not meant as financial or tax advice. So please always consult with a licensed financial and tax professional before you make any investment decisions. And also, please note that past results are not indicative of future ones. What I'm going to do is go into these 5 ETFs one by one, give you my perspective, the pros and cons, so that you can decide which one, if any, belongs in your portfolio. And the very first one I'm going to talk about is CHPY. And by the way, it's known as CHPY in some circles, but CHPY is the Semiconductor Portfolio Income ETF by YieldMax, and its most recent distribution has it at over 40%. By the way, I made a video on CHPY that talks about its NAV erosion, and I'm going to put a link to it at the end of this video. But the bottom line is, when I looked at its NAV erosion, I did not find any, and that's pretty unusual for a lot of income ETFs, especially YieldMax income ETFs. The other thing I like about this fund is that its net assets is over 1 billion, so it does provide a safety net for you in terms of not only liquidity, but staying power for the future. CHPY's most recent distributions have a range of 52 to 77 cents on a weekly basis, paid out every Thursday. And there is one con that I did want to talk about, and that is its heavy focus on the semiconductor industry. And right now it's doing really well, but will that last forever? Not necessarily. As long as you understand that, and as long as you look for ways to diversify by looking at other ETFs to complement this one, then it's actually not as bad of a con as if you were only invested in it for the long term. Now, the next 2 weekly ETFs I'm going to talk about, I'm going to do as a pair. They are EDGX and EDGQ. EDGX right now pays a distribution of 9.04%, and EDGQ pays a distribution of 13.08%. A couple of cons that I see with these 2 ETFs. First, the youth of them, they've only got started in February of this year, so there's not a lot of track record for you to take a look at it. Also, when you look at the assets under management, looking at EDGX specifically is just around 6 million, and looking at EDGQ, even though they're a little bit bigger, they're only 10 million. That's just not a lot of assets under management. And I know it's partly due to the youth of these 2 funds that just got started a few months ago, but still it's something to be aware of when looking to invest in these weeklies. And also, as I close this, I wanted to mention that EDGQ has a NASDAQ 100 focus, whereas you look at EDGX is looking at the selective US 500 index. Now, the next ETF that I'm going to talk to you about is TSYX. And this is the TSPY Lift ETF, which is from Tap Alpha. It launched in January of this year. And the easiest way to understand it is, if you look at TSYX, it's approximately 1.3x the daily performance of TSPY. And Tap Alpha states that TSYX targets 130% of TSPY's daily performance before fees and expenses. And it primarily gets that leveraged exposure through derivatives, such as total return swaps. So the relationship is roughly TSPY and TSYX would be 1.3x. And this is exposure that I believe can be substantial income, but also very risky for you. And I'm going to explain why. Because TSYX uses leverage to target 130% of TSPY's daily performance, this means that both the gains and losses are going to be amplified and the leverage is going to reset every day. So, because of that daily reset and compounding, in a volatile market especially, TSPY could make money over time while TSYX actually stays flat or even loses money. TSYX does target a distribution rate of over 19%. And even though they pay weekly, something else to consider is the relatively high fee that they charge. And also, the assets under management is not very much right now. It's only around 17 million. So something else to consider. So this is what I would classify as a little bit more sophisticated weekly income ETF. So you have to be comfortable with the possible risks that come with it, and also understand that while the main ETF could be making money, TSYX could be sitting flat for you. So just be aware of that. The final weekly ETF I'm going to talk about is, in my opinion, one of the more interesting ones. The ticker is KYLD. It's the Kurv High Income ETF. And it currently has a distribution of 23.7%. The reason why I think it's the most interesting is because it doesn't really focus on any one sector. It's one of the more diversified weekly ETFs out there. Here is a screen of the holdings as of late August. In terms of the industries that are represented here, is very diverse. So you have e-commerce, you have financial services, you have semiconductor, you've got aerospace, you have metals and mining, the gold miners ETF, the silver miners ETFs, along with, of course, US Treasury bills. In terms of assets under management, it's sitting right over $48 million. So it's still a small fund, but it's definitely bigger than the other funds that I spoke about just recently. And here's a graphical representation of how the ETF has done really since the year began. So this is year to date. So this is a hypothetical $10,000 and the growth, assuming reinvestment of dividends and capital gains. If I was to switch this to since inception, I'm going to do it now. You can see the growth. There are some peaks and valleys, of course, yet generally you're going to see an upward trend of it. If I was to change this to 3 months, again, you can see generally there's going to be some peaks and valleys, but the general upward trend. And I'm going to switch it to 6 months so you can see that as well. So in summary, now you have a list of 5 income ETFs that pay you every Thursday, like clockwork. And this is my opinion, not meant as financial advice. What I think the ideal investor for each of them is the following. CHPY is ideal if you believe in high yield weekly paychecks without the fear of NAV erosion, as long as you're comfortable with an ETF that is concentrated in the semiconductor industry primarily. If you're comfortable with novelty, if you're comfortable with leverage, TSYX is an ETF that you might want to take a look at, provided you understand the risks and complications of leverage. Now, EDGX and EDGQ, in my opinion, are viable income ETFs that pay you weekly. However, they're really very small in terms of assets under management, and they're really very young for my personal liking at this stage. But I will be taking a look at them and tracking them for the next 9 to 10 months to see how they do. So if you want to see an update on these two, definitely subscribe to this channel, as I'm going to put out a YouTube video on them in the future. Finally, we have KYLD. I think if you are an investor that values diversity, having an ETF that is not concentrated on any one sector, yet receiving high weekly income, then this is an ETF worth taking a look at. By the way, here's a link to a video that I made with regards to CHPY. It's a deep dive specifically talking about its lack of NAV erosion. Take a look at it. Thanks so much for watching. Have a prosperous rest of your week.